October 2025, a month that could define an entire generation of investors. Deadlines, decisions, pressure. Make sure to hit like and share this video, because what I'm about to explain will reveal the truth behind XRP ETFs. Every chart, every whisper, every movement in the data now points to one name: XRP. For years, this digital asset has lived in the shadows of controversy and speculation. But now, as the clock ticks toward the end of October, the silence is breaking. Because this month, something big is about to happen, something that could reshape not only the price of XRP, but the very structure of digital finance itself. Before you imagine instant rallies or headlines screaming, XRP to the moon, take a breath, because the truth is more complex. What happens in October will test the patience, discipline, and understanding of every investor in this market. For a cryptocurrency to have a fully tradable ETF, an exchange-traded fund, two major approvals must be granted by the U.S. Securities and Exchange Commission. The first one is Form 19B4. This is the technical green light that allows a stock exchange, like NASDAQ or CBOE, to list the ETF itself. Think of it as the door being unlocked. The second one is Form S1. That's the SEC's formal approval of the product sales prospectus, the document that allows it to actually begin trading. That's the moment the door opens. Only when both are approved can the ETF begin trading, often within 24 hours. Here's where it gets interesting. The SEC can take up to 240 days to reach a decision on the first form, the 19B4. And that means every application filed back in February of 2025 reaches its final deadline right now in October 2025. This is it. The window where the entire XRP ETF saga could finally reach its turning point. But not all ETFs are created equal, and understanding the difference is critical. There are two main types: spot ETFs and leveraged ETFs. Spot ETFs actually buy the real asset. They purchase XRP directly and hold it in custody. Every share of the ETF represents real XRP sitting in reserve somewhere. That means real buying pressure, real demand, and real impact on price. Leveraged ETFs, on the other hand, are built on derivatives, contracts that track XRP's price movements without ever touching the actual coin. They're bets, wagers, mathematical shadows. They create no real buying pressure, no supply absorption, no fundamental price support. So when it comes to XRP, the only ETFs that truly matter are the spot ones. Now, here's where the stakes get high. In October 2025, several financial giants, Grayscale, 21 shares, Wisdom Tree, Midwise, and Canary Capital all reach their final SEC decision deadlines. Grayscale's window closes on October 18th. Then, one after another, the rest fall between October 19th and October 25th. 5 major institutions. 1 week. One decision that could shape the next chapter of XRP's history. Think about that. We are witnessing the same moment that once changed Bitcoin and Ethereum, now repeating itself for XRP. But here's where reality cuts through the excitement. Most people believe that ETF approval means an instant surge in price. That the moment the SEC says yes, charts will skyrocket, profits will reign, and everyone becomes a millionaire overnight. That belief is an illusion. History tells a very different story. When Bitcoin Spot ETF was finally approved in January 2024, it didn't spark a rally. It sparked a crash. Within 2 weeks of the approval, Bitcoin dropped nearly 20%, from $47,000 down to just under $39,000. Billions evaporated in days. The same investors who celebrated the news were the first to panic. Then came Ethereum. Its ETF launched in July 2024, and the reaction was eerily similar. Within hours, ETH slipped from $3,450 to about $3,350. A small drop, but significant. It was the biggest single-day fall in 3 months. So why did that happen? Because markets move before the event, not after it. The smart money positions early. The crowd rushes in late. And by the time retail investors celebrate, institutions are already cashing out. It's the same pattern every time. Buy the rumor. Sell the news. If the XRP ETF is approved this October, it's entirely possible, perhaps even likely, that XRP will experience the same short-term volatility. A spike, a correction, panic, then silence. But that silence is where the real story begins. The true power of an ETF doesn't show up on day one. It builds over months and years. The real impact lies not in the speculation, but in the infrastructure. When an asset gains ETF status, it crosses a threshold. It becomes legitimized, accessible, integrated into traditional finance. Suddenly, pension funds, hedge funds, and institutional investors can include it in their portfolios. Liquidity deepens, volume stabilizes, volatility fades, and that's when long-term growth begins. That's what happened to gold in the early 2000s. That's what happened to Bitcoin after its ETF shock. And that's exactly what could happen to XRP. So if you're expecting an overnight explosion, you might be disappointed. But if you understand the long game, you'll recognize October as the moment the foundation gets locked in. Because XRP's potential doesn't come from hype or price charts or social media campaigns. It comes from utility, from real-world use, settlement systems, cross-border payments, tokenization, and banking infrastructure. That's the engine that's been quietly running beneath the surface for years. And once ETFs make XRP accessible to institutional players, that engine could finally move into high gear. This isn't about price anymore. It's about adoption. It's about liquidity flowing from the old world of finance into the new one silently, invisibly, but permanently. When Bitcoin's ETF launched, retail investors saw it as a beginning. But for institutions, it was an exit. They had already accumulated, positioned, and hedged. When the floodgates opened, they sold into retail demand. That's why timing matters. If XRP follows the same trajectory, the smart money has already been buying for months. They've been testing custody systems, aligning with liquidity providers, and preparing for the first wave of ETF flows. By the time most people react to the headlines, the game will already be halfway played. That doesn't mean it's too late. It means you have to play differently, with patience, not emotion. Because after the initial volatility fades, after the correction settles, a new phase begins, the adoption phase. That's when long-term investors quietly take positions and wait. That's when the market matures. That's when XRP stops being a speculative token and starts being infrastructure. Imagine early 2026. Spot ETFs are live. Liquidity is flowing. Traditional financial institutions can now hold XRP exposure without touching a crypto wallet. The volatility will still exist, but beneath it, a slow and steady transformation will begin. Global settlement systems integrating Ripple's technology. Banks using XRP for instant cross-border transfers. Developers building on top of its ledger for tokenized assets and payment rails. That's when utility becomes price. Not hype. Not hope. Utility. Markets are like stories. They move in chapters. The first chapter is speculation. The second is correction. The third is transformation. And October 2025 marks the turning of that page. For years, XRP has been building in the background, fighting lawsuits, skepticism, and manipulation. Now, the narrative is shifting from courtroom battles to global integration, from crypto forums to boardrooms. From doubt to deployment. This isn't the end. This is the beginning. Patience beats excitement. Understanding beats emotion. And utility real, scalable, measurable utility beats everything else. Adoption doesn't shout. It whispers. It moves quietly, invisibly, until suddenly it's everywhere. That's what's happening right now, the quiet preparation before the next wave of global finance. October 2025 may not deliver fireworks on day one, but it will deliver something far more powerful: validation. And that validation will open the door to a decade of institutional capital, regulatory clarity, and mainstream trust. When the headlines come, when the charts swing, when everyone else is shouting, remember this moment. Because true investors don't follow noise. They follow patterns. They understand the mechanics. They study liquidity, filings, structure, not hype. And when the dust settles, they're the ones still standing. The ETF isn't the finish line. It's the beginning of everything.